Let's start with the Unit 2. Unit 2, we are going to learn about majorly with different types of bank. When we are talking about different types of bank, of course, it has to start with the apex body of our country, and that is Reserve Bank of India, RBI. So till now, we have learned a lot about RBI, that RBI has does this, RBI has does that for our country. But what is the history of RBI and what exactly its role? Let's learn about RBI, its constitution, and what are the main objectives of RBI in today's class. So let's start with knowing RBI. So it is the Indian main central banking institution. All the banks in India works under the supervision of RBI. Then it is established on April 1st, 1935, and when it is formed, it was formed as a private institution. But in 1949, it was nationalized. So, what is the main task? It controls the monetary policy of Indian rupee, means our Indian currency, how much to print, where to invest the money, how to increase the value of it. Everything is decided by RBI. There are majorly 4 zonal offices of RBI, all 4 in metropolitan city, starting with Delhi, Mumbai, Kolkata, and Chennai. There are 4 zonal offices in the 4 metropolitan city. Apart from having the 4 zonal offices, it also has 20 regional offices. These regional offices are mainly situated in the state's capital. And apart from that, they have also 11 sub offices. So in total, they have 35 offices around the country to facilitate the banking system. So what's the constitution of our RBI? Before RBI, the financial system in India was managed by the Imperial Bank of India. So Imperial Bank of India currently is State Bank of India. So before RBI, Imperial Bank of India was the main bank in our country. But when Banking Regulation Act 1949 came into existence and they have nationalized RBI, they gave RBI the major power to control over the banks in the country. Then Hilton Young Commission recommended establishment of central bank. Hilton Young Commission was a commission which used to focus on the poor laws around in UK, and at that time we have the British control in our country. So Hilton Young Commission, they have introduced, they have suggested that there should be a proper central bank in country who doesn't do the normal banking services but only should regulate that how banking system should work in India. So on their recommendation, RBI came into existence. So started in 1935, it was headquartered initially in Kolkata and later it was shifted to Mumbai in 1937. So RBI was nationalized, as I told, on January 1st, 1949 along with Banking Regulation Act 1949. So through the Reserve Bank Transfer of Public Ownership Act 1948, it was nationalized from private bank to national bank. Now, organizational structure, if we see that RBI is main person of RBI is the governor, followed by deputy governor, then chief directors, principal chief general manager, chief general managers, deputy general managers, assistant general managers, assistant managers, and support staff. So these are the people who work in RBI towards the banks in the country. So this person, if we see that what happened in the latest scenario in RBI, this person, Shri Sanjay Malhotra, is the new governor of RBI. Earlier to Sanjay Malhotra, Mr. Shaktikant Das used to be the governor of RBI, but now our banking system is handled by Shri Sanjay Malhotra. So now let's come to the main part of RBI, that what are the objectives of RBI and what exactly RBI does, for what purpose RBI is formed. So these objectives are so many but majorly categorized in these 10 points which we are going to discuss now. The first one is monetary stability. Monetary stability, mainly RBI functions towards controlling the inflation and deflation. In our country or any country, the inflation should be between 2% to 6%. Means if your country's inflation is going beyond 6%, that means the things are costly and people are finding it difficult to afford to their needs if the percentage is beyond 6%. And currently, what is our inflation rate? It is 6.5%. That means 0.5% we are inflated. So, in case of inflation, what is the condition of inflation in first place? Inflation means when people have a lot of money in hand. I have a lot of money in hand. What I want to do with that money? Of course, I want to spend it on luxury. I want to spend it on things which makes me happy. That means probably want to go on a vacation. I want to buy new gadgets. I want to put money somewhere invested. So, what happens when everyone has a lot of money? They want to buy things. To give one example, let's say one company is manufacturing only 100 phones, but there are 1,000 people who want to buy it. So, what company will see? Company will see opportunity to increase the price to give it to, because demand is more, and in economics we know when demand is more, supply is limited, price tends to go up, right? So the companies or the organizations do the same. They increase the price of the product, so it becomes very difficult for the people who actually want to buy it, right? Because these people have a lot of money, they are demanding, supply is limited, prices go up, and overall inflation come into existence. Now, to control the situation, what RBI does? RBI instructs the banks to pull the money back from the people by doing what? Bank asks to increase the interest rate for the savings, have lucrative investment options so that people can invest more instead of spending. First thing. Second, they ask these banks to increase the interest rates on loan so that the people should feel that getting a loan is a very costly affair and they should not go and get a loan. When you have to pay more interest on a loan, of course, you will be demotivated to get a loan. When you don't have a loan, that means you don't have money in hand to spend. So they work on, RBI instructs the banks to increase or decrease the interest rates to facilitate and to control the inflation and deflation in the country. So with this, they help in the monetary stability of our country. The second one, financial stability. Financial stability by providing that we should not face the financial crisis like how our country has faced in 1991. So RBI makes sure there is a financial stability in the country and we have sufficient funds in hand whenever we are in need. If we have to import something, then we should have sufficient funds for our emergencies as well as for essential needs. So there should be a financial stability in the country. We are not having a lot of funds lying around idle, or we should not have deficit of funds around. Then currency stability. Currency stability, majorly they focus on issuance of currency. We know that RBI is the main person or main organization, only organization we can say, who can issue the currency. So having a stability in currency so that a lot of flotation of currency should not happen in country, and the currency which we have in hand should be of good, I mean it should be legally tendered in the state. So any counterfeit currency notes or damaged notes are being circulated, RBI takes it back and provide the right amount of currency to be floated in the system. So these three types of stability RBI makes sure should be there in the country. That is monetary stability, working on the inflation and deflation, financial stability so that we are not facing the financial crisis again, and currency stability so that the legal tendered currency which we have in our country should be of right shape and size. Then next one, economic growth, the development of our economy so that we are meeting the global standards and we have an economy stronger where we are GDP and national income is going up, and to make sure that our country is developed. So growing the whole country economically, where we are focusing more on exports and less on imports, and we are dependent on our country itself instead of other countries. So having a economic stability also RBI takes care of. Then employment generation, how RBI generates employment when they are focusing on this priority sector, developing more and more industries. More industries means more workforce they need. More workforce means ultimately lead to creation of more employment, means funding these industry will lead to have more and more industry growth in the country. With this growth, workforce development also happens. So unemployment problems reduced. Then external value of the rupee, means we have seen that when the value of a currency is dropping day by day, we are struggling to match with the dollar or any other currency. So it impacts our overall economy, as well as it also leads to having a instability in our financial system. So controlling this external value of rupee is also a task of RBI. It's objective of RBI to have a stable rupee rate during that time. If you go back to the story of financial crisis 1991, during that time also, Dr. Manmohan Singh, one task he has done, he has asked RBI to decrease the value of Indian rupee. So, but how decreasing the value of Indian rupee will help the country? When we decrease the value of Indian rupee in contrast to other currencies, other countries see us country which is inexpensive, means for their $1 probably we are giving 100 rupees. So they see us as inexpensive and they tend to buy more. When they are buying more, of course they are giving us more foreign exchange. Okay, they are giving us more foreign currency, right? So these foreign currency ultimately lead us to have more reserves in foreign exchange, and we can buy more later, and slowly this rate was gone up based on the demand. So by decreasing or increasing the value of rupee, they maintain it in the international market. Then development role, they have development role mainly focus on the development of countries need, means in our country we need to have infrastructural development, we need to have educational development. There are so many kind of developments which are needed to be done in our country, right? We need have proper roads, hospitals, schools, then electricity, other utilities, water. So for every possible thing we need money. For all these developments which is for everyone and where government can contribute towards the development, RBI provides the fund for them. So they have the developmental role where they fund the government, and RBI provides the total amount which they have and which they can get from the economy, so that it lead to development through, as we know that when in budgets government passes that these many crores are dedicated to this area. So how they decide this amount, RBI helps them to decide this amount with the fund they have. So they provide this developmental role, they feature in this developmental role by providing the exact figure which can be used for a particular sector. Then financial inclusion. Financial inclusion has been the highlighting point of finance ministry or RBI or any bank. Why financial inclusion is so important? We cannot claim to be a developed country if our general public, it can be even the interior part, if a person is living, he should have banking facility. No one should be debarred from availing this facility or banking service. To cover everyone under the banking facility, financial inclusion schemes are being prepared. This Pradhan Mantri Jan Dhan Yojana, or we can say DPT, all these are minor steps which are being taken forward to deal with this problem of financial inclusion. So RBI always focuses on this area. Then next is consumer protection, because we as general public put our money in the banks, right? So when we are putting our money in bank, what we need, we want our money to be safe. We want our money to be protected. Protected out of what? Of frauds or being stolen. So we entrust the banks with our money. So RBI makes sure that our money is safe with the bank. So RBI has so many rules and regulations which are for specifically to save our interest, to save general public's interest and their valuables. So consumer protection is also one big aim. If any bank who is found to be not following banking regulation or who's not following the rules, they are levied with big fines. Recently, only RBI has imposed fines on four major banks of in crores just because they are not following the rules. And if any bank is in verge of being insolvent or they are at the verge of not being payable, are at the verge of being bankrupt, RBI come to rescue those banks. Why they need to rescue the bank? Because general public's money is invested in the bank and their interest, their money should be protected. So RBI makes sure that our money should be safe. And the last point here is digital transformation, because we need to meet the global standards. And to meet the global standards, we cannot rely on traditional methods. We need to improve ourselves by innovating and by using the digital techniques in our banking system. So these UPIs, neo banking, and what not is being done in banking area, and we are digitally transforming. And now digital currency also going to be one of the latest thing in the market. So digital transformation to provide edge to the customers where they are getting the facility without entering into banks. Neo banks are one of those things where the bank is totally digital, totally virtual, no physical facility. You simply need to have a phone. You can download the bank in your phone and use it thoroughly. So these are the new trends, digital transformation in the banking area. So with this, we have learned that how RBI is formed and what are its main objectives.